joining us for this week of Maxi's Market Review. I'm Max, and I'm joined with Sid, as usual. And this week, let's dive straight in here. This was FOMC week. So this was the week that the United States, the FOMC, basically is the meeting that decides the interest rates on a federal level. So if interest rates are going up, it makes money more expensive to borrow for businesses. Generally, higher FOMC rate announcements tend to make the market sell off as people escape out of equity assets and into cash, because cash is paying a lot more in interest. So that was the this week FOMC meeting came in, and the numbers were consistent, as in they did not go up, they did not go down. We are still
that's what the market expected, right?
Exactly.
Right.
Just as expected, right? Yeah. Exactly. So before all these FOMC meetings start, there's always analysts' projections of what they think will happen. And generally speaking, those projections are pretty accurate. And also, generally speaking, when those projections are not accurate, we can see quite a bit of volatility. For example, if we were expecting the market to hold consistent, and then instead the Federal Reserve decided to cut the interest rates down, that would have given us a big green spike in the market, as traders would have rushed deeper into equities, because it would imply that money is getting cheaper on a business level to borrow again, and therefore the money printer is being turned back on, as the Wall Street bet community likes to say. But either way, this week FOMC meeting happened. We got our consistency confirmed, so we are remaining at 5.5% interest on a federal level, and we have pulled up here the SPY, which is the S&P
on the left side.
Yeah, and
we closed bullish. I mean,
yes,
like you said, because it was expected. So I think next week it's gonna pull. It probably gonna pull back a little bit, and like SR, basically SR flip it.
SR flip that orange line you have drawn out there. So we're trying to, exactly.
So
we're looking
something
for
like this.
We're basically looking to turn that orange line into the bouncing board where we're going to move up higher. And that line is very much, pretty much the top of the last bull market, I feel like, if you were to zoom out a little, right? Like,
no, we're like way above.
Oh, we're way, I was thinking crypto charts. Yeah, we're way into all-time highs.
The SPY is like,
let's go.
Been making new highs.
And it seems to still be on trend to continue that. So like you said, we're looking at a bullish close for the week. It is also bullish news to get a consistent FOMC rate. So just the fact that the rate didn't get cut or didn't get increased, that's good news, generally speaking. Yeah. And the market was expecting that news. After the meeting, the following day, there was also the press conference where Jerome Powell, who is the chairman of the Federal Reserve Board, he basically gave his sentiment speech, which I kind of got the sense of like it was more of the same, which he usually is saying.
Yeah, usually he doesn't, he doesn't like.
Yeah, he doesn't really hint one way or the other.
Like, just because they don't want the market.
In the past, when he kept rates consistent, he would always in the meetings be like, raising the rates isn't off the table yet. They might still need to, where basically his whole sentiment is always like, we're monitoring inflation and we're going to keep a close eye on it, and we're going to do what it takes to make sure inflation stays in check. Of course, also this last week we got the CPI report, we got unemployment numbers. Big week for like market in general, like information that helps decide the direction of a market, especially on a macro kind of a trend. And so all those numbers also came in around the estimations that they were projecting at. So there was, while the numbers themselves might not be amazing, that's not really the point. The point is that the numbers were in line with what the market was expecting. And because the expectation wasn't upset, neither is going to be the direction here. So we do still have runway to keep moving up here in our S&P 500 index here with the SPY, which Sid has drawn out here. Very likely to see a little bit of a pullback on that weekly chart to basically create an SR flip around 5,036. I'm sorry, 536. We're nowhere near 5,000 yet with the S&P.
I think the SPX.
Maybe when I'm an old
like
man.
5,000.
Yeah.
So like
that's why I was thinking 5,000 too. So the 500.
It's the same thing. I mean, the SPY is the ETF.
The SPY is basically like it's an exchange traded fund that is an index of the S&P 500.
Exactly.
which is great.
But yeah,
Uh,
so like, and
and
also I know we had talked about like GameStop.
yeah,
Here's GameStop on the right. You know, like if you look
Roaring
at the full
Kitty.
thing,
We had
we had a bull signal
Yep.
like before the pump started actually here, and we were tracking this big wedge
honestly,
which it
if
broke
you
up.
if you follow the whole GameStop stuff, you can see that bull signal happened even before the average cost of deep fucking value, or
Yeah,
Keith bought at I think $23. Our bull
yeah,
signal
exactly.
would have gotten you
He,
in at 16.
yeah, exactly. So way before he actually like, you know, came back on Twitter and Reddit and started
Yeah.
interacting with
So no
people.
doubt he's a very clearly a well like seasoned trader, and like he
He probably
understands these
watched
trends.
this same wedge.
Yeah,
that we drew
I
out.
would not be surprised. He saw the breakout, and then he decided once the confirmation was in, which would have definitely been that like 17 to 20 range, there is where we're bouncing on that
Exactly.
trends line, where we've basically pushed above the strength band, and then we pulled back down to bounce off of it. That's the SR flip confirmation, and that's
Yeah.
around the time that deep fucking value came back to kind of like tease us with his
Yeah.
his $500 million position.
Maybe he has our indicator and he saw the
Hey,
bull
maybe.
you know?
Although I think he's
Can't
very
confirm or deny that.
exactly. Yeah, who knows? We'll have to leave that up as speculation. Although he is also very motivated by fundamental analysis. But
Yeah.
looking at the charts, which is usually how we stick to our price discoveries here, you can see Sid has drawn out. There's a trend line, and while
Yeah, there's a
go on.
yeah, there's a I was gonna say like there's a trend line and it seems to be holding. So even with this crazy volatility,
Mhm.
it seems to still be holding. So until the trend line breaks, I think we still continue up.
Yeah, and there is
And-
some fundamental reasons why people are very excited about GameStop,
Yeah.
especially around $20. A lot of it has to do with GameStop has a very deep war chest as far as the company's
right,
actual funds.
yeah.
They have like 4.2 or 4.18 billion dollars in cash.
Yeah.
So they have money. Also, the CEO recently, the CEO of GameStop, won his lawsuit against what was it, Bed Bath and Beyond, I think.
Yeah.
So
Right.
he was awarded, I think, $16 billion in that
Yeah,
suit. So
crazy amount
the
of
company
money.
has money, the management has money, and the bet that Keith is making here is not necessarily that there's a short squeeze that's playing out. It's the bet that he's making is that the management of GameStop, using the capital that they have in their war chest, and even potentially personally, are going to be able to capture a transition from the physical gaming industry market into the digital and esports kind of modern meta of that market. And so maybe they can. I mean, they have a decent management, it seems. They have a lot of money to do this. So maybe. But what we're going to do is keep following the chart.
We keep following the chart.
The chart still looks fun. Like this looks worth trading, especially if we're near that trend line.
Yeah, exactly. And what we do is keep buying each time it falls to the trend line. We start scaling in.
Yeah.
It's as simple as that.
And then it's a fun one to hold because of the whole apes together strong, and there's the meme culture around it. And if you were here 3 years ago messing with the GameStop squeeze, maybe you are nostalgic for that again. And so it is the opportunity to kind of like participate and scratch that nostalgia itch a little bit.
Right.
So we'll have to keep an eye on that. But right now, it's still the squeeze and the like bullishness of GameStop still very much in play, and you saw that trend line still intact. Lastly, today we want to look at the crypto markets. So
crypto market
it looks less exciting.
We might be a little contrary to what a lot of people are. They still
that's true.
Think it's bullish, but here, at least what I'm seeing plainly from TA, the chart, is the fact that we had marked out the weekly, the last weekly high, and prices failed to close above it. It keeps tapping it. Got rejected a bunch of
tapping
times.
that. So that red line you have marked out there for Bitcoin is basically that was like the previous resistance when we hit that high. And so in order to continue our uptrend here, we want to see us, breaking the resistance and turning it into support, that SR flip that we're always talking
SR
about.
flip. Exactly.
Like support resistance flip. And we're not seeing that here. We're seeing it actually hold as support, and which, is effectively
or as resistance.
I'm sorry,
Yeah,
yes, I'm sorry. As resistance. And it's confirming, the potential of it holding as resistance. So that basically would confirm, a push down at least to the lower end of that channel again to test the bottom end of
so
it.
like because also our indicator, the way it works is like you have a bull signal and then you have a strength band. We have another metric called the strength band, and in a bullish trend, price will tend to bounce on the strength band, or like the strength band will act as support. So I wouldn't rule out the price now like dropping all the way to the strength band. If it still continues to be bullish, it should like hold. Same thing with Ethereum, like see and now we're getting also, it looks like a lower high on both and a double top. So like and the stock RSI is like curling over as far as for Bitcoin goes. So this seems to me like a top, and this is the huge channel that
the channel could still be in play, but it's a big range. So like for Bitcoin, we're looking at like 70,000
months.
And we're looking at the bottom. There. The bottom is like 52,000 per unit. That's quite a ways down from here. So that's like a 20% drop.
21%.
So that's it's a dip in the sense that like, on these longer time frames, we could still stay in our bullish trend here. We could stay even north of our strength band, but that doesn't mean we're not potentially looking at, a decent sell-off in the coming weeks. Especially with the way that this chart is starting, the like last week is starting to close a little bit more bearish, and we are getting kind of our McDonald's golden arches starting to play out, which is that double top that Sid was talking about.
So like, I mean, I personally risked off like on the daily when I saw it like actually like create a double top on the daily. I took some off the table, but I was waiting for the weekly close, which just has.
Is quite bearish too. And it's not a good look.
The weekly, like, bearish engulfing candle with like a double top, this would be a good point to risk off if you're still holding. I mean,
especially if you're holding in profit, there's no shame in taking profits, and then we can always enter again when the situation changes. So this is a dynamic image, and it's going to change week to week. And our goal is, of course, to like, hopefully kind of like give some clarity on what we're seeing, and then give a little bit of clarity on what we're doing based on what we're seeing. Not necessarily telling you what you should do. You should do whatever is right for you, and it's up to you to make those decisions. But what we're looking at here is that, hey, we've had an amazing run. Looking at the technical indicators, we are looking like it's starting to turn a little bit more bearish, and we're in pretty serious profit since our last spot buy. Last time
Totally.
So no problem taking some profits and like Sid put it off risk. Take some risk off the table. You can rotate into less risky assets, of course. The SPY looks good. If you see GameStop, if you want that risk, GameStop has a nice trend line we just showed. Maybe keep an eye on that kind of stuff. But also, there is a lot of sentiment, especially in crypto and Bitcoin markets, about hodl and never selling, and like it's fun. It's fun to be part of that community, and that sentiment is, of course, prevalent within that community. But I would also argue it's not like good advice if you're an investor.
If you're an investor or a trader, like you should know.
It is good advice if you're not.
Risk off and go back in.
If you're not a trader, then it is good advice. Just buy and hold and don't try it, because if you don't know what you're doing, it's more likely you get eaten than you don't. But
that's more like a gamble. But
if you are trying to be
chart, right now it looks bearish.
Right now it's starting to look bearish, and we're going to keep an eye on this, of course. But I think for like the big takeaway here is that we're in profit. That we've had an amazing run up. And general market sentiment is still bullish, but the technicals are starting to turn a little bit bearish. And so it is a good opportunity to off risk a little bit, take some of those profits into into the realized side of your portfolio, and then assess the situation as it develops. So that's kind of like our takeaway this week. And so as a quick recap, this week, big week news, lots of so we got our FOMC, we got the CPI reports, we got unemployment numbers, lots of like clarity, if you will, for the macroeconomic picture to help the market make a decision on which direction to move. So looking with that information in mind, looking at the stock and equity markets, they're still looking pretty bullish. They are still pulling up.
Stocks are looking more bullish than crypto.
Yeah,
honestly.
exactly. Right. And then like looking over at crypto, we are starting to see a little less of like a clear bullish line there. But also crypto is an exciting asset class, and there is no reason to like think that, the bear market is coming back in full swing. It's more that we've had an incredible run, and we should take profits when we get the inkling to do so. And this is kind of like that inkling where it's like, okay, we're being given these like hints. We're looking on the time frame that we're always looking on for our bullish sentiment. And so on that same time frame now, it's like, okay, it is starting to look like we have some room here to take profit and maybe re-enter lower, or just take profit and reassess a little bit later on to see if we want to keep our risk exposure the same. And that's the whole kind of concept of being a trader, is just managing risk. And managing risk comes down to exactly what we're talking about now, where it's, taking a look at what our positions are and then adjusting the risk exposure those positions have. So it doesn't mean we have to sell everything into cash when like the markets start to turn down, but it does mean we should be aware that the markets are looking like they're turning down. And if we're sitting on profits, making our own decisions with at least an informed kind of like mind.
Yeah.
But yeah, we'll have to keep a close eye on all this and see how it plays out. And if you'd like to like join our conversations in more real time, hop on over to maxi.io, sign up. We got a first month is free, so if you want to get access to all these indicators that we're using, and also join our private Discord conversations where we're talking about this stuff back and forth and sharing more technical analysis breakdowns, as well as like real-time moves that we ourselves and also that other members are making and posting in there. We'd love to have you join that conversation. Of course, like I said, first month is free, so nothing to lose. And if you love it, great, we'd love to have you. And if you just want to try it and you don't like it, hey, no losses there. We won't have any hard feelings. We're just happy you're giving us a try. So we'll hopefully see you there. And if not, we'll have fun trading and stay safe out there as these markets get maybe a little bit more volatile in the coming weeks. Until then, we'll see you around.